Welcome back. You're watching Commodity Champions. Joining us on the show now is Manav Garg, who is CEO and founder at ICTA. Manav, hi, thank you for your time. First of all, I want the summary of 2019. It has been a year of trade wars, geopolitical uncertainty, high volatility. What has been the hallmark of 2019? How will you describe this year?
I think 2019, as you rightly saying, is the year when it is primarily driven by trade wars and geopolitical uncertainty. I think Mr. Trump has been the biggest impact on commodity prices in 2019. The amount of uncertainty we have seen in 2019 has been unprecedented. Typically, commodity markets have always been very volatile, but this year, because of trade agreement and every day, the traders and the companies have to anticipate how the trade wars would impact them, has put everybody's plan into an unpredictable zone, and that is what has impacted the market most. So, for example, from our perspective, we have seen the U.S. construction companies coming to us and saying now suddenly U.S. government has announced a trade tariff on steel and aluminium. So, how should my purchasing price be impacted? So, businesses has to deal with untable amount of uncertainty. I think that is the hallmark of 2019 has been.
Okay, Manav, let's take a step ahead then. And what is the sense that you get for commodity prices getting into 2020? What cues would you watch from the global markets? And what is your sense? It's going to be high volatility yet again, or is it going to be higher prices that you're betting on?
I think the lower prices in commodities will continue. I think we will see increased volatility, and that is primarily driven again by trade war. As you said, the US-China trade war is still not settled. Geopolitics is still very shifty, I would say. So I think we'll continue to see lower market prices. In addition to that, we will see higher volatility.
Manav, I was talking to my earlier guest as well from Bank of America, and he says that he's very bullish on precious metals going forward, especially gold, where he expects all-time highs in the years to come. What is your own sense on the sector, whether it's going to be gold, platinum, palladium? Are you also buying on to this sector?
Yeah, so precious metals is the only one which has bucked the trend. I think what I've seen historically is that when there is increased geopolitical uncertainty, precious metals start going up because then money looks for safer haven. So I think a little bit of that is being seen in precious metals. But overall, I think the energy market is the one which determines the prices. So right now we have seen the lower energy market for the longest period of time. And I think that trend would continue.
Manav, you do not just look at commodities, you are onto the technology side of it, the software part of it as well. So what is your sense going forward on how important a part technology is going to play, one, in the trading aspect, and the other when we talk about sustainability, energy, agriculture, value chain? How have you tied all of this together?
I think from a software perspective, we typically follow three larger trends. So I think overall in commodities, we are seeing a changing business model. As you know, US has become energy positive. So now they are exporting energy instead of just a net importer. We are seeing a total disruption in the agri markets where the trading margins have reduced and the farmers are becoming far more important. So from a software perspective, globally we are seeing more companies adopting software because now they're trying new business models and trying to connect the entire farm to fork value chain, for example. We're seeing increased interest in sustainability, because the consumer trends are changing and consumers are demanding far better food, and therefore, CPG companies are giving much more sustainable food options, and therefore trading companies also trying to comply with that. We're also seeing higher sustainability effect on energy markets driven by, again, regulations. So that's what we are seeing. As far as Indian companies are concerned, I think they're still very early days for them to adopt to the software. Primarily because the size of the export houses are still not that much to afford a software. But with the cloud technologies, I think this year actually has been the highest demand that we have seen from the Indian market, though not many have bought. But I think there is an early interest from the market. That's what I would say.
So my very final question to you, Manav, how would you look at the year coming forward then? Where would you want to put your bets in? I mean, as you said, the supply chain, value chain is going to be quite important as well. And so is the aspect of whole trading. How have you seen the investment come into this sector, the importance that would be given, especially in the developing countries for this one? and what are we looking at the better investments as we get into the next year as a participation?
For 2020, the outlook is we will see higher regulation, first of all. Number two, we will see that the new models will get tested by the companies. We will see, companies taking advantage of optionality. So when the energy demand supply is changing, it also gives more optionality to the traders. So therefore, from our perspective, we are seeing the interest is almost doubled from last year, and we think the trend will continue in 2020 as well. It's primarily driven by three fundamental things. So first is, companies are finding ways to make money from the optionality that is in the market, which is driven by the changing business model. Number two, a lot more companies are looking at a supply chain from producer to the end customer, or from farm to fork, or from exploration to the energy buyer in a much more holistic fashion. So they are trying to stitch the entire supply chain, so to speak, instead of just looking at trading as an activity. And therefore they look for more software which can therefore tie the entire integrated planning from them, from farm to fork, or from exploration to the end buyer usage. So we're seeing far more and more companies adopting that. The second trend we are seeing is there are a lot of startups coming up, especially in Geneva region, in Houston. There's trading in LNG is becoming very, very important. We are seeing new companies in LNG. We are seeing a new business model in agriculture. There are companies who are making disruption by having different kind of seeds and then coming with new trading models. We are seeing new farmer networks coming into play, which looks for typically a marketplace kind of software. We're looking for governments who are trying to help the farmers and trying to see how do we increase the livelihood of the government and therefore give them direct market access or give them better prices. So I think all these trends are leading to people adopting more technology. And then when we overlay this with the cloud, which is when all the older companies, Fortune 500 companies or global 100 commodity companies are shifting the landscape to cloud. They are giving away the old legacy system and getting ready for the next 5 years, where I think they will make more data-driven decisions. So in summary, I think we are seeing companies going more towards data-driven decisions to be able to take advantage of changing business trends and models in commodities market.
All right, Manav, really appreciate you joining us today. So it really is going to be about the precious metals, high volatility, and of course technology and supply chains, value chains, especially the agriculture side of it, which will be in focus again in the next year as well. But with that, that's all the time that we have on Commodity Champions. Thank you for watching.